Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 29th of March. In terms of markets, it's been a fairly stable week, although there have been a couple of subtle differences in terms of things that have been driving them. If you look at the thing that has stayed the same, that's very much the continued rotation, which has tended to surface by a move away from big tech high growth stocks towards more value, cyclical, traditional businesses. The things that have perhaps changed is that the vaccine rollouts are going at different paces around the world, which is obviously affecting economies. Big tick for the UK and the US so far, whereas in Europe, the blockages there are causing further lockdowns to be implemented. Another slightly different thing that's happened over the last week to 10 days is a resurgence of the fractious relationship between the US and China. This has also extended and involved the likes of Europe and the UK as well over alleged human rights abuses. But obviously it's one to keep an eye on and it hasn't gone away. So in the year to date, the Dow Jones is currently up 6.6%. The S&P 500 4.1%. The Nasdaq now up just 0.7%. And our own FTSE 100 up 4%. Turning to next week, it's a 4-day trading week, of course, leading up to Good Friday. Also marks the end of the first quarter. So the fact that the FTSE 100 is up 4% in these 12 weeks is reflective of some increasing institutional international interest based largely on valuation grounds. Economic-wise, in the US, we're going to have the non-farm payrolls, likely to show again that the US economic recovery is becoming entrenched. 379,000 jobs were added in the previous month, and the expectation for this month, which will be looking back to March, of course, is that 500,000 jobs will have been added, with the unemployment rate fairly stable at somewhere around 6.1%. It's a fairly light reporting week for large corporates, but there is certainly one exception. We are expecting full year numbers from Next. Obviously, this has been one where the pandemic has hit, although the online sales have picked up some of the slack from the fact that stores have been closed. And interestingly, we're also at the situation now towards the end of March where we're comparing share prices with the sharp falls that were seen during the first lockdown this time last year. So Next, for example, the share price is up 73% over the last year. In terms of the full year numbers, it will also be interesting to see what their outlook is, as we have a partial return to the office over the next few months, and indeed the ability to be out socialising again. Will that result in many wardrobes being refreshed? If so, that will be positive, obviously, for retailers, and Next could be front and centre in that particular recovery. Thank you for watching. Have a great week.